Hey everybody, Trendy John here. Today is the 26th of May, 2025. It is Memorial Day, Memorial Weekend, and I hope everybody's having a good time. I am and chose to do this today because yesterday we were pretty busy and we're getting ready to go out on the boat here shortly and make a day of it. And then we'll come back, do a little bit of pool time and hang out. And in the meantime, the futures are open. So it's a little bit different. A lot of times I'll give you my analysis and probably my overall sentiment, which I'll still do that, but I almost feel like it's unfair because the market's already open. But we will look at the levels, just concentrate there. But let's get started with this week's major U.S. economic report. This is catalyst that we pay attention to, the news, right? That pushes price into the levels that we want to buy or sell at. And our advantage is we do this analysis, we find the levels. The news is just something beautiful. Honestly, we don't watch it, right? If I've never told you before, my wife and I stopped even, we have zero news on in the house for at least 10 years now. And this is the way that I prefer it because I don't want to be swayed by something I watch on TV. I only want to pay attention to price action. It's just so important for me. But we do need to know when this news comes in so that we could be prepared for, volatility and so forth. Okay. So this major U.S. economic reports and Fed speakers for this week, you can go into a website. It's this one right here. I use Market Watch. It's free. It's really straightforward. So you come to Market Watch, and right here in this section right here, there's an economic calendar. I just click on that, and this is what I use. All right. So obviously today we are closed for Memorial Day holiday, and then Tuesday coming in tomorrow, we have some data here. Nothing really. Is sticking out here where I'm really that concerned about a lot of volatility. Obviously, the POTUS likes to, send out some tweets and stuff like that. And a lot of people are paying attention to his schedule to know when he's going to be on the mic and stuff like that. So if you want to use another resource to understand that, that's good. But again, guys, we had the levels first. We know what we want to do when we get there. The only thing that's really sticking out to me that could cause a little bit more of volatility would be this consumer sentiment coming in at 10 Eastern time. On Wednesday, the 28th, Minneapolis Fed President Neil Kashkari speaks in Tokyo. And then we have the minutes on Wednesday. Again, a lot of traders say, well, they're minutes, right? It's like old school or it's old news, so it shouldn't do anything. But a lot of times it still does. It's really it's just strange, isn't it? But anyways, we had the Fed's May FOMC meeting that's happening right here at 2 Eastern on Wednesday. So two events so far that could cause some volatility. And then on Thursday, we have initial jobless claims. I love that. GDP, and then we have some Fed heads speaking. And then on Friday, consumer spending, PCE index, and again, PMI and some other factors in there. So I wouldn't say a boring week, but before I move on, it is a 4-day week. So for our option traders, I'm always thinking you have less time to be right. And so for if you're a beginning or a beginner trader, it's always nice to buy a little bit of time. That usually is not appealing to traders when they first start to trade because it's a little bit more expensive. But, if I could go back to 10 years ago, I would tell myself, to buy the time and make sure that I buy at levels and not shoot for weekly options and stuff like that, just because it really helps and gives you a little bit more time to be right. All right. So this is our economic calendar. Let's go ahead and move on. I'm going to move this out of the way. And that's going to get us into our earnings. All right. And so on our earnings, I use eWhispers. I'm going to bring that down as well so you guys can see that and know how I get there. And we're going to come right here. And I just come over again, come right over here and check this out. This is their tag. I don't get any sort of promotion from them and I don't work with them, but I absolutely love to use their stuff because it's easy. I can always count on it. I come over here, boom, it's right here. But what I'm looking at for me is I love trading into earnings, especially if I'm seeing um, something that tells me that the stock could move big to the upside or downside. And then once I do my analysis on it, just like I teach in my classes, then I'll go to the portion on Thinkorswim that, looks at the expectation. I don't want to know that before I do my analysis. So if their expectation, right, the market makers and so forth, are a little bit tighter than what I'm seeing, then that gives me an opportunity to buy a little bit out of the money using debit spreads. And I love doing that because you can get some really big returns on very low risk. And if you guys have never heard of that or seen that, please come into Simpler Trading. I got some videos you can watch. I have a class that you could watch. There's a lot of good information. So we do have some great names coming out this week. Some that I could be interested in, and that would be OKTA, Dix, NVIDIA, of course, CRM. And then moving down here, we have on Thursday, Costco, Best Buy, Foot Locker, Marvel, Ulta, Zscaler, all of these, Dell, all of these are ones that I'm interested in to see how, what that analysis looks like and if I want to trade into their earnings report. Now, remember, you can always wait afterwards, but again, I like to specifically teach on how you can trade into earnings and not be worried about what happens. All right. Anyways, that's what we got here for this week's earnings. And so I'm looking forward to some of that as well. Let's go ahead and move this out of here. This is going to bring us into our next section. As I move down, I'm going to be looking at SPY, the bigger picture. I like to use the quarterly. This kind of keeps me on the right side of my portfolio most of the time. Sometimes I'm wrong, but that's okay. But most of the time I'm right. So SPY quarterly candle. This is going to be something that, again, for the rest of the year, I want to concentrate on. So we have the EMA cloud, right? It's just this cloud that really helps you understand that when prices really take a big dip, you usually find buyers around the 9 EMA. That's what this coefficient is, if you will. That's right here. And you can see that we pulled into this past quarter. Also, just anchoring our Fibonacci's from this point to this point, which is a range. We simply came back to what we call the golden pocket, which is the 50 and 618. We also came into one of my indicators that was there before price got there, and we also knew that's where we wanted to get long. So it all really worked out very nicely here. Now you'll notice that we are on a hammer, but you'll notice that we stopped at this blue line. This is called the upper trendy edge. And that right there, friends, is exactly what we expected was for price to reject there. And now we're just kind of waiting for this big move to kind of digest. And I think people are losing sight of that. Everybody's trying to guess, right? Well, I think the market needs to go to the lows, or I think the market needs to make highs. Listen, just pay attention to the levels. I can't make this up. This came right into my level where I want to be long. This came right into the level where we want to either go short or pull stops up and just kind of remain patient. One thing that I did is when we came up into this level, I bought puts and I just sold those puts last week for 60+%. And, it was a bigger size put, if you will. It was a spread or whatever. And then I bought some calls to the upside, I think for 30 plus days or something like that. And I added to those on, I believe, Thursday or Friday. What am I looking for? Well, we're going to, talk about these levels. So this week, price continues to reject off the trendy edge, which is what I'm showing you there, around 593 and a half, but holding the primary bull channel, which is the 23.6 of this move from here to there. Okay. The two major levels this week for me are 577 and a half and 588. Again, 577 and a half and 588. So on the weekly, when you look at this, you could see that we had this really nice move. It came right into the trendy edge. We pulled back. And I think currently, let me look at our futures really quickly. Yeah, our futures were up about 66 points right now. So that's about $6.50 on the SPY. Um, not that big of a move. But what I'm looking at, where I'm getting these levels, is I'm taking our fibs and I'm placing it in the gap, and then coming up to the pivot high and using some Fibonacci's. Okay. But as far as the weekly is concerned, especially on the ES futures, it was an inside week, and because it was an inside week, I'm neutral, and I'm looking to see if we get a formation inside and up or inside and down. Okay. We'll talk about that a little bit later here. All right. So this is our weekly. Everything looks good. We have this cloud down here, and it's very close to, if we were to break down, it's always hard for me to trust a gap up on the holidays, and I said that on Friday. It just seems like more times than not we get this enthusiasm. I don't know if it's just because everybody's like, out and about and the markets gap up and they try to bring that euphoria back into the market and then they drop it, but it just seems to never really hold up as much as you want it to. I'm not saying we're not going to, but if we don't, then I want you to be focused on this gray zone down here, which is between 564 and 550. This is where we could find some buyers if we were to lose that nice gap up. Okay, let's go ahead and move on. We're going to come into our next chart, and that is going to be, let's see here, we're going to look at the QQQs, okay, or the Qs. And same thing, I want to look at the bigger picture. So let's go ahead and take a look at that. And we'll go to the quarterly. Very nice move. Again, came down into the trendy edge. We came down into, you could see here, I anchored my coefficients from the low to the high. We came into the 38.2 and the 50. So really, if we were to put that zone right in here at the golden pocket, that also worked very well for this pullback. The 9 EMA is holding. The primary coefficients were above the 23.6, just like the SPY. It is very bullish. And then coming into this week, the yearly edge is resistance until proven otherwise. Once we get over that level, I do believe we have a high probability of making an all-time high. I think we've digested here, for a week. It could be another 2 weeks before we see any sort of significant move. But if we get back up and over those blue lines on the SPY and the Qs, I think we have a very high probability of 90+% that we will make an all-time high. Okay. The same thing here. Two major levels for me are 522 and 488. 522 and 488. And if for some reason we come into this gray zone down here, I would expect buyers to show up. That is the QQQ on the quarterly. Well, what about the weekly? You could see last week and the week before, we came up to the trendy edge, we expect resistance. We came up to the trendy edge, we expect resistance. So this level is very important to us, and that comes in around 522.85, and we're using that level as one of our important levels for this week. If for some reason we don't hold the gap, once again, guys, I think we could come down towards the cloud or the 9 EMA, back into or close to this gray zone. If we were to get all the way down here, this is definitely an area where I would expect buyers to come in. All right. Let's go ahead and move on. The next thing we're going to be looking at is going to be the dollar. Okay. So right in here, I started using Thinkorswim for this. A lot of times I use TradingView, but you just put in $sign, the DXY, and I'm using this one right here, and I've already got it, plotted on here. I got our blueprint, and everything's happened exactly what I thought would happen. We came into a buy zone. The dollar went to the upside. It hit our coefficients, what we call the bear channel, and we hit the cloud. So I expected a rejection there. I talked about that last week. We pulled back, and so this week I'm going to be pretty much using the same levels as last week, 102.7 and 97.95. I'm still expecting lower zone if we break 97, so between 96 and 94. This is a pretty nice sell-off. Again, I'm not worried though in the overall market unless the dollar really starts to bid above that 102.7, guys, which would put you above the bear channel. Next thing I want to be looking at is going to be the TNX, the US 10-year Treasury. So if we come over here, we're going to use TradingView for a second. Let's go right there. All right, so let's talk about this. There was some, talk about it last week. A lot of traders brought it up, but honestly, we've just been trading between an inside and up and an inside and down zone over and over and over. Usually, what will happen is I wouldn't say peak fear, but a lot of fear comes into the zones, and you can see we reject once we hit these zones. Now, at some point, the zone would become fragile, and the more you test it, just like a resistance line, it would break, and prices could continue to move to the upside. But for now, it hit again, it rejected, so nothing out of the ordinary. Next thing I want you to be aware of is if we were to pull all the way back into the 3.8 to 3.4, we could find a bounce there. My overall analysis was that we were going to trade between these zones for a very long period of time, but I'm not really concerned unless we get above here, or, you know, definitely not concerned if we break down below here. So again, I just think that we are positioned between two zones. Up here, fear; down here, euphoria. Okay, let's go ahead and move on. The next thing I'm going to be looking at is what we call the skew. And the skew is very important. I love using it, but it's just one indicator that I use with this entire analysis. Traders might use the skew index to adjust their portfolios. If the skew is too high, you might want to consider buying puts, or buying yourself some sort of insurance. Usually your insurance is a lot cheaper when the skew is higher. When the skew is very low, that means we've already hit extreme fear, and your premium is super expensive. I know that it sounds easy to talk about, but you'd be shocked. A lot of traders have a hard time doing this. But when the market's going up in the background, the skew is rising, okay? And we're getting closer to that protection. Right now, the skew is right here. So it's not like we're at an extreme level, but we have a long ways to go. So the market could rally quite a bit, a lot more than you would expect, before we find ourselves looking for that premium or insurance again. Okay. But we're also at a very important level if we continue to break down, where we would be looking at long-term calls. For right now, my overall analysis with the skew, it's at 139. It has some room to travel, meaning we could get a lot more greedier in the market, but we're also coming into an area of resistance that tells me that the market could just kind of digest. But once, if it gets above 146, 150, I really think the market's going to continue to take off towards those blue trendy edges that I showed you earlier on the SPY and the Qs. And just be prepared as we get higher and higher that I may layer into some sort of insurance, if you will. Okay, let's go ahead and move on. Our fear and greed index, don't need to show it to you guys, but it's at 64, which is saying that we're greedy. All right. It can go all the way to 100 at 50, 50, 55. It's neutral. So it's not like we're extremely greedy. And that's what I mean. This says we could still move quite a bit to become extremely greedy. So there is some room for the market to continue to move up here. We are just digesting a really big move. It looks great. There's no reason to over analyze and think that the market needs to crash, or, revisit lows of the year. Let's just trade it week by week. As of this week, what I really like is talking about the futures. So when we look at the ES futures and the Nasdaq futures, and this is part of our analysis, is that we want to look at it from a top-down approach. Okay. And I say top down, we obviously I look at the quarterly charts, but for this broad market analysis, I want to go weekly, daily, 4 hour. Okay. And what I love is that last week, the weekly was an inside candle. Okay. So what I mean is we had this previous week, really bullish, right? And then we had the weekly this past week, and it closed within the body of this guy right here. Currently, we are double inside here. It gets super or extremely bullish, guys. If we can get above 59.30, then things look really, really good. We're still quite a ways off of that, but nice little gap up here to at least try to attempt it. Now you're going to notice when I place my fibs from the gap into the highs here, okay, when we do this, you guys can see that price is holding what we call the this area right here, the golden pocket, the 50 by 618. Okay. So far as ES futures go, I'm not really concerned unless we break down below 5,800, and I don't get extremely bullish unless we get up above around 5,930. So those would be my two major levels going into this week on the ES futures. Again, I love that we're inside. I'm just waiting to see if we break above last week's upper body here, or if we start to break down below the body of this previous week as well. Okay. On the daily, this is what it looks like. These are triggers. These are at levels where I'm either finding, inside up, inside down, some Fibonacci, that kind of stuff. There might be the 200 SMA might be aligned. But our main focus here is just knowing that this is a playing field. And when prices get there, like this trigger long, I had moved up last week. We came into there. It was a beautiful buy. It's a playing field. So what I do is I give you these levels, and then when we get to the playing field, then we're looking for a couple other small indicators, on smaller time frames to see if, hey, do I want to get long here? Do I want to get short? Okay. So this is not any sort of investment advice. These are just levels, and they're just to let me know, hey, we're in that area where I might want to take action. Okay. So what do you do here? You can put these levels on your chart too, just to try and, see do they work well. And I think you'll see that a lot of them work very, very well. For example, this is our 4 hour from last week. These were levels I gave you. This was your support level. Price came right into there, and if you're paying attention, this could have been a nice little buying area. You can see we got a really nice bounce there. Okay, I'm going to keep this zone, the same zone that I had last week. I'm going to keep that there. And then right up here, I'm using the weekly trendy edge as a resistance level and the yearly edge. So if you will, you could combine these. I like to look at everything like a zone. It just helps me because then I can understand my risk is the difference between the two. But this would be an area that we can move up into. Matter of fact, we can move probably close to this by morning if the overall bullish sentiment kind of pushes throughout the day and into tonight. I think we could move into here by early Tuesday, maybe even tomorrow. I'm not sure. But again, if we break down, I gave you those levels before. If you're into shapes, you can kind of look at this and say, hey, this could be like an inverted head and shoulders, and potentially again move to the upside there. All right. Next thing we're going to look at is the Nasdaq. So let's go there. My overall sentiment here, sorry if I didn't say on the ES, is neutral. And the reason why it is neutral is because we're coming off an inside week. All right. Now this is beautiful. I love these colors, red, white, and green, baby. You could see that we go inside and up if we get above this level here. And we go inside and down if we go below that level. You can do the same thing on the ES if you like. This is just kind of give you an idea. In here, we're pretty much neutral. If we break above here, again, I think we could move up towards this sell zone. And if we break down below this level here, which is 20,947, then we could go inside and down and come back towards the 9 EMA. So far, just overall neutral. We're not inside and up. We're not inside and down. We're just kind of double inside at the moment. Okay. Let's go ahead and move on. This is going to be the same thing I showed you on the SPY. We got triggers here. I just take note of those triggers. And when price gets there, then I'll decide if I want to go long or short. And then same thing over here on the 4 hour. This is last week's chart. This is your support. It worked really well. We're going red and white there. And this yellow line that is on your chart here is your resistance for this week. And then above that is the trendy edge, which we've already talked about. This is the big level. The blue lines are your really big levels week to week. If we get back above there, that's where I think we can go extremely bullish and make our new all-time high. Okay. So that's what I have on the ES, the NASDAQ, the SKU, the TNX, all that great stuff. And then I like to end this with Bitcoin because I am holding Bitcoin, have been for quite some time. It's in a long-term portfolio. I have no plans to sell or anything like that. And when I say long-term, I'm talking 20 plus years. So, but what I'll tell you is that the quarterly is absolutely beautiful. This was a 2025 projection that I put together in December and gave to our members here. And so far, things are looking really great. We pull back into and close to the green zone. I added, and now we continue to push up here. There is a part of me, and I want to do a segment. This could be something that I feel like this is showing us where the market can go as well. And this is just from a technical standpoint. We had the blue levels, all right, and we got above that. So it was a rejection, just like the ES and the Qs are doing right now, and the Nasdaq. But once we got above it, we had that 90+% breakout to make an all-time high, and that's exactly what we did. And so things are looking really, really good. Um, timing is the variable, but we're getting really close to my next target, which is 114,000 basically. Once a base is established here, we could pull back to the 100 to 90,000, but I think we could end up closing up here in the 2025 projection before the end of the year. All right, so things are looking good. The 90 MA is holding. Again, I add to this a lot, it feels like, just to make my position bigger and bigger. But I am, I just don't have time to, even though I do this weekly, I don't have time to get in and out. This is a long-term hold for me. So if you guys are long-term holders too, I'd love to know, love to hear about it. But you guys have an amazing rest of your day. And Melissa and I will see you back tomorrow, 30 minutes before the open. If you're thinking about coming and joining our awesome community, we got a lot of sales going on right now as well, Memorial Weekend sale. If you haven't picked up the indicator script bundle or you're thinking about a quarterly or annual package, please call support. They'll be happy to help you. You guys have a wonderful day. Talk to you soon.